Here's the uncomfortable truth. While most silver stackers are celebrating price moves and posting shiny photos, the real danger is building quietly underneath the market, and almost no one is positioned for it. The next move in silver won't reward the loudest voices or the biggest stacks. It will punish complacency, blindside late buyers, and expose who actually understood the game and who was just following headlines. If you stack silver, you probably think you already know what's coming. Inflation, money printing, debt spirals, currency debasement, and a future where hard assets matter again. That story has been told so many times it feels almost comforting, but comfort is exactly what should worry you. Markets don't hurt people when everyone is scared. They hurt people when everyone feels right. And right now, silver stackers feel very, very right. Look around. Premiums are treated like badges of honor. Delivery delays are celebrated as proof of scarcity. Every dip is instantly labeled manipulation. Every rally is declared the beginning of the end for fiat money. That mindset feels strong, but it's also dangerous, because it blinds you to what's actually shifting beneath the surface. Silver isn't just a metal, it's a hybrid. It lives in two worlds at the same time. It's money and it's industrial fuel. That dual nature is exactly where the warning begins. Most stackers obsess over monetary demand and completely underestimate how fast the industrial side can change the rules. Solar, EVs, AI infrastructure, defense systems, medical tech. Silver isn't optional in these sectors. It's critical. But here's the catch. Industrial demand doesn't behave like retail stacking. It doesn't panic buy. It doesn't dollar cost average. It contracts aggressively when margins tighten and governments change incentives. At the same time, paper markets still dominate price discovery. Futures, options, leverage, and algorithmic flows set the tone, not coin shops or YouTube sentiment. That creates a dangerous disconnect. You can have real-world tightness while price goes nowhere. Or worse, price drops while everyone is convinced scarcity should push it higher. That's how people lose conviction right before the real move. Now add something most stackers don't want to talk about: liquidity stress. When markets seize up, everything that can be sold gets sold. Gold, silver, even assets people swear they'll never touch. We've seen it before. In moments of crisis, silver doesn't act like a safe haven at first. It acts like a liquidity sponge. It gets dumped to raise cash. That doesn't mean silver is weak. It means silver is misunderstood. And then there's positioning. When too many people crowd into the same trade for the same reasons, upside becomes fragile, not because the thesis is wrong, but because timing becomes lethal. You can be right on fundamentals and still get crushed emotionally and financially if you're early, over-leveraged, or psychologically unprepared for volatility. This is the part no one likes to hear. The biggest risk to silver stackers right now isn't suppression, manipulation, or even governments. It's false certainty. The belief that simply holding silver guarantees a smooth ride to wealth. It doesn't. Silver is violent. It moves fast. It punishes hesitation and rewards preparation. And the next phase won't look like what most people are expecting, especially those who think all they have to do is sit back and wait. Because what's coming will separate stackers who understand cycles, liquidity, and human behavior from those who just bought a story. And most people, even experienced ones, are far more exposed than they realize, completely unprepared for how quickly sentiment can flip. One moment silver is the obvious hedge, the next it's dead money, ignored, mocked, or worse, sold in frustration. This is where the real damage happens. Not at the bottom, not at the top, but in the middle, when conviction erodes slowly and doubt creeps in day after day. That's when people make mistakes they swear they'd never make. Think about how most stackers actually behave, not what they say online. They talk about long-term conviction, but they watch the price constantly. They claim price doesn't matter, yet every pullback feels personal. When silver lags gold, frustration builds. When equities rip higher, regret sneaks in. That emotional tug-of-war is exactly what the market feeds on. Now layer in the macro reality that's forming. Central banks are walking a tightrope. Inflation isn't dead, but growth is fragile. Rates can't stay high forever, but cutting too early risks reigniting price pressures. This creates violent cross-currents in currencies, bonds, and commodities. Silver thrives long-term in monetary chaos, but short-term it gets whipsawed by rate expectations, dollar strength, and risk-on-risk off flows. Here's where the warning sharpens. Many stackers are positioned as if the move will be straight up. No deep pullbacks, no extended sideways grind, no gut check moments. That assumption is lethal. Historically, silver does its best work after exhausting almost everyone. It spends months, sometimes years, going nowhere while fundamentals quietly tighten. Then, when attention is gone and patience is gone, it explodes. But explosions don't happen on your schedule. They happen when positioning is light, not crowded. When fear has replaced confidence. When people stop talking about silver altogether, ask yourself honestly, does that feel like now? Or does it feel like too many people are leaning the same way, expecting the same outcome, for the same reasons? Another blind spot is counterparty risk. Stackers focus on owning metal, which is smart. But many still underestimate how fast rules can change. Export restrictions, windfall taxes, forced disclosures, changes in reporting requirements. These don't have to be dramatic or confiscatory to matter. Small policy shifts can freeze liquidity, distort premiums, and trap capital when flexibility matters most. Then there's the uncomfortable possibility of a false breakout. Silver runs hard, social media explodes, mainstream headlines finally notice, and late money piles in. Then momentum stalls. Price chops. Weak hands get shaken out. The narrative flips from inevitability to disappointment. That's how bull markets disguise themselves as failures right before the real leg higher. The stackers who survive and thrive through that phase aren't the loudest or the most emotional. They're the ones who planned for boredom. Doubt, and volatility from the start. They understand that silver doesn't reward hope. It rewards discipline. They know when to add, when to sit still, and when doing nothing is the hardest and smartest move. Because what's really coming isn't just higher prices. It's a test of patience, psychology, and timing that will expose who actually understood the warning signs and who just liked the idea of silver more than the reality of how brutal this market can be. Silver doesn't care about your intentions. It doesn't care how long you've been stacking or how strongly you believe in the thesis. It only responds to pressure, imbalance, and human behavior under stress. And that's why what's coming will feel so disorienting to so many people. At some point, something breaks. It might be a bond market accident. It might be a currency crisis in a place most people aren't watching. It might be a sudden recession that forces central banks to choose between saving growth or saving credibility. When that moment hits, silver won't move in a clean, logical way. It never does. It will gap. It will fake out. It will spake out. It will surge and then slam back down hard enough to make even seasoned holders question themselves. This is where preparation matters more than prediction. The stackers who get hurt aren't the ones who are wrong about the long-term value of silver. They're the ones who didn't plan emotionally for chaos. They didn't expect margin calls elsewhere to force selling. They didn't expect premiums to behave irrationally. They didn't expect weeks of silence after months of hype. And here's the part almost no one talks about. When silver finally starts to move for real, it won't feel good at first. It will feel dangerous, volatile, unstable. You'll see days where it rises faster than feels reasonable, followed by drops that feel like the move is already over. That's how markets flush out weak conviction even in strong trends. Meanwhile, industrial users will quietly secure supply on long-term contracts. Governments will reassess strategic materials. Institutions that ignored silver for years will start treating it like a serious asset again, but they won't announce it on social media. They'll do it quietly, methodically, and without emotion. By the time headlines catch up, the easy positioning window will already be gone. So the real warning isn't that silver won't go higher, it's that the path there will punish simplistic thinking. Buy and hold isn't enough if you haven't thought through liquidity needs, time horizons, and your own psychological limits. Conviction without structure turns into stress, and stress leads to bad decisions at the worst possible moments. The stackers who come out ahead will be the ones who accepted this early, who understood that being early feels exactly like being wrong, who expected boredom, doubt, and sharp drawdowns as part of the process, not signs of failure. They won't be shaken by silence or distracted by noise. They'll recognize the difference between price action and signal. Because what's really coming isn't just a silver bull market, it's a reset in how value, trust, and scarcity are perceived. Silver sits right at the center of that shift. But only those who respect the warning signs, prepare for volatility, and stay grounded when emotions run hot will still be standing when the move everyone talks about finally reveals itself. In the end, silver doesn't reward belief, it rewards readiness. And the uncomfortable truth is this: most people think they're ready. Very few actually are.